Welcome to the panel about liquidity and LATAM today. My name is Hormoz from ATFX. I'm based in Dubai, and actually it's my first time in Mexico. And it feels like Mexico's conquering the world here, what I see. It's quite amazing. I wanted to, you guys to introduce yourselves, 30 seconds each, maybe your companies, just very briefly, if I start with you, Matt.
My name is Matt Castle. Excuse me. I am the Chief Operating Officer for Edgewater Markets. Our headquarters is based in Greenwich, Connecticut. We have offices in London, Singapore, Mexico City, Chile, Brazil, Lima, Peru, and satellite offices in Puerto Rico and California.
Great, thank you. Anya.
Hi, everyone. My name is Anya Ratovskaya. I'm a freelance FX consultant. Over the last 14 years, I've held a number of executive positions in the leading financial and technology companies. Right now, I consult retail forex brokers, asset managers, and prop trading firms on various business aspects, from strategic business development to operations to product market fit. I'm very excited to be here, and I'm looking forward to the productive and insightful conversation.
Thank you so much. John?
Hello, everyone. Good morning. John Murillo, Chief Dealing Officer at B2Broker. We are a liquidity and technology provider. I've been to Mexico several times in the past, so once again, delighted to be back here.
Excellent. Marilu.
Buenos días. I'm the Mexican of the panel, so if you need any Spanish, please let me know. I work for GCX. I'm the marketing director there. Our GCX company was actually founded by the ex-CEO and founder of Finalta, so it's interesting to share the panel. And it is a pleasure to be here with you. GCX is working to help institutional and professional traders, basically. And we have digital brokerage solutions, interbank liquidity, and trading technology. And we have offices in London, Dubai, across Europe, in Denmark. And at the same time, we're looking to grow in LATAM, and obviously that's why we're here.
Morning, everyone. My name is Paul Groves. I am the CEO of B2B Finalto. I've been there for 15 years, ever since it first started under the name of CFH Clearing. This is my first time in Mexico, hopefully not my last. Basically, like a lot of my compatriots on here, Finalto is multi-jurisdictional. We're in the UK, we're in South Africa, we're in Singapore, Australia, Cyprus as well, and with various tech centres in various places in Europe and Central Europe as well. So I welcome all you to the panel, and hopefully you'll find us quite insightful. Thanks a lot.
Thank you. I wanted to start with the first question, actually. And Paul, I wanted to start with you.
Yep.
I want to know a little bit generally about the liquidity situation globally and where you are, maybe wherever, for each of you, where you are. And generally, what's going on with gold and the stuff. What's the latest?
If I knew what was going on with gold, I'd probably be a millionaire.
You are.
Yeah, I mean, gold is the top topic at the moment, without a doubt. We are seeing unprecedented volumes in gold. It's being handled well, and I think a lot of the brokers are handling it very well. I mean, I think on average out there now, with a lot of brokers, it's about 60% of their volume. Now, for us, it's around 40% of the volume because we're seeing a lot of diversification. But fundamentally, the retail has sold into it all the way up. It keeps throwing money at it. Margin payments are always made. It keeps going up. It keeps going up. We see these retracements, $20, $30 in a day. It's not surprising us anymore. The liquidity aspect seems to be holding up. We do get these pulls where it sort of gaps, and it gets slightly frightening, especially for the liquidity and the risk managers. I honestly can't tell you where I think it's going to stop. I mean, if I was a trader, which I was many years ago, I probably would have sold it all the way up and would have lost an absolute fortune by now. But you know, it's good that we've got the volatility, but it's probably slightly too much. I think we want to see a bit more diversification back into some like more FX and maybe the indices as well. But you know, we quote the price and the clients hit it. So as long as they're happy, we're happy.
Yeah, actually, Matt, I'm gonna jump to you on this one. What do you see in the U.S.? I know you're global and stuff, but what do you see with gold and other stuff?
Well, gold has become a de facto inflation hedge. It has become an interest rate play on the Federal Reserve's interest rate forecasts. And you know, it was 2 weeks ago where the Fed came out with their dot plot. And when that dot plot came out is really when gold started pushing the upper levels of all-time highs. And you know, just yesterday when you know the CPI report came out, it's suggesting that the Fed may not be cutting rates as aggressively as they had anticipated. And I have concerns about gold reacting negatively, sharply, in the weeks to come. Certainly at one time in 2024, there will be a liquidity event in the market, a flash crash that we've seen in gold before, that we've seen in the pound, that we've seen in the yen. It's just, these are events that happen, and they continue to happen, and they will continue to happen going forward. And I expect gold to have that moment in 2024.
Gold's not so. So you think we will have a flash crash this year, maybe?
Absolutely.
Okay, in gold. All right, Anya, what do you think? What do you see where you are and with your clients?
Yes, I do have a lot of clients in Asia, less clients in MENA region, and quite a few clients in LATAM. And I don't see a lot of volume coming from gold, actually, in LATAM, mostly majors, as well as some crosses, franc, I would say. And I feel like gold may be a little more sophisticated as an instrument for LATAM right now. Again, it depends on the type of a client and type of brokerage, but certainly gold is something that everyone is talking about in the Middle East and in Asia right now.
Okay, thank you, John.
I think it's a phenomenal product from a volatility perspective for most of our clients. They see a lot of volume coming in. With that in mind, I think the question originally is, how is liquidity holding on, right? And I will agree that for the time being, we're seeing fairly decent pricing and execution. Now, going back a few months, remember we had a panel back in Dubai. My view at that time was that we should see how the exit of Credit Suisse was going to play out. Well, surprisingly enough, I find us in a position today that it really didn't have that significant impact until this moment in time. Now, there's some research at present that my team was conducting, and they shared that before I came to this panel, which tells us central banks are buying gold aggressively since the beginning of the year. This is a very interesting development. So there's a lot of hedge funds that have a play, they're long in the market, and we see this price action to the upside. Now, for as long as we have participants consistently in the game, I think we will see a fairly decent execution. We will see liquidity levels pretty decent. But going back to what you just stated, Matt, is will we have an event this year? How are we going to be? How is the market going to price the current volatility in the upcoming months? Remember, we have U.S. elections and major global economies that will also have elections. This has an impact on that element. And again, interest rates. There are, I think, several interest rates decisions ahead. All these plays a tremendous role on gold. So I think for the time being, pricing on it is pretty decent, and I think all of us are seeing very good volume coming through due to this reason.
Okay, Marilu?
Yes, from our side, to be honest, we don't see as much gold, but what we're seeing, certainly, it continues to be the safe haven asset, right? So that's without a doubt. But from our clients, what we're seeing is that Bitcoin is the new gold. It's substituting gold as a safe haven asset for our clients. That's what we're seeing. And we're seeing that in particular for Latin America, where obviously you see crypto as a growth opportunity. So I think from our side, you cannot forget that there's obviously crypto. You cannot forget that, yes, to your point, there are political elections. Obviously, we cannot forget there are also elections in Mexico that will also have an impact. And there will be elections for a president and for senadores and diputados, which also have an impact in the fiscal and monetary policy. And those will definitely will create higher volatility for gold and for other instruments. So that's what we're saying. That's what we are saying in terms of how do you manage the risk in the best possible way for your clients.
Great, thank you. And Paul, so how about LATAM? So this region, what do the clients want? What do the clients want? And what do they, what's needed? Gold's not trading as much here for you as well? Or you said 40% of your flow is gold, here even less maybe?
I think it's probably fair to say that we're the new kids on the block here. Finalto's presence in LATAM, Mexico, South America is pretty limited. You know, one of the reasons why I've come over here and the team have come over here is basically to meet new faces, to meet the brokers. We've had plenty of Zoom and team calls with brokers down here, but it's always better to get in front of people face to face. And we're trying to ascertain what's needed to be successful down here. And you know, a few of my compatriots on the panel here have been very successful in this area in retail and B2B. Our focus is the B2B side. Our focus is facing the brokers. Our product that we have and have had for many years, I like to think has been pretty successful in Europe, Middle East and Asia. LATAM, I think we see a lot of potential. For me to honestly say what sort of flow we see, actually the small handful of brokers that we do face in Mexico, their flow and their volumes really replicate a lot of European brokers. They are actually trading a fair bit of gold with us. They're trading the US indices and they're trading the G10 as well. So as I say, for Finalto, we're here. I suppose it's a bit of a reconnaissance mission for us. You know, I'm not here to tell people what they should take off of us. I want to find out what they need. I want to find out if we've got the bells and whistles to deliver it as well to them. So as I say, I'm very humble here today.
Yeah, we love humble people. Marilo, so for you guys, yeah, you mentioned cryptos, right? CFDs died for you guys. You're into cryptos only.
We're also obviously into fiat as well. Don't take that the wrong way. Obviously, for us, in terms of liquidity, we do have the solutions for both fiat and crypto. We look at delivering the best solutions for institutional trading. And I think from our side, we want to offer tighter spreads, lower cost for execution. And we do that, first of all, by not having a B-book. We do not run risk. And we are looking to make sure that we are delivering the best solution for our clients in that way. This is what we are seeing because this is what people are demanding. So that's why if you think about LATAM, certainly they're looking for solutions that are straight clean through pricing. That's what they're looking for. So that's why we are here delivering that to our clients.
Okay. John, you guys do cryptos as well? Maybe some of that here?
It's a region which is very peculiar in that sense. There's a lot of crypto CFD business coming from LATAM, for us at least. One of the uniqueness that I find in LATAM in general, not just in Mexico, there's a lot of clients, because one of our verticals is tech. So there's a lot of clients that come to us for copy trading, not only for CRM, but for prop trading solutions, which is something very hot in the market nowadays. And simultaneously, we sell a lot of our hedge fund module. That's something that hedge funds here, they're running their business, they need to automate their process, so they come to us and we facilitate that service. That's something we see a lot of demand in LATAM. I think this is very important. I'll also say that LATAM is a region that you need to understand culturally. It's a little different than some parts of the world. You need to understand each region very well in order to be able to position yourself. We have found that to be a very big challenge in our business, at least.
I would agree that LATAM is all about three, I would say, category of people that are looking for liquidity. So we have European brokers working in LATAM, and they have a certain needs for liquidity. And then we have local retail FX brokers, and then they have certain needs of liquidity. And then we have fund managers, asset managers that have their own unique needs for liquidity. But LATAM in general is all about social trading, social following, asset management, and for like small fund managers, for copy trading, everybody needs liquidity that is able to execute, I don't know, like 50, 60 lots per click, just because they have hundreds and thousands of clients clicking on buy within their minute time frames, right? So you need to be able to accommodate that. And I think when we speak generally about liquidity, local brokers do have issues managing such flow, just because it's massive amounts of orders coming in within short time frame. And they do not have sophisticated enough risk management, I would say, while European brokers are way more advanced there, and they're certainly taking a big part of market just because they do have an access to better liquidity, and they do have a more experience managing all these aspects of social trading and copy trading that is extremely popular in LATAM.
Excellent. Matt, one of my colleagues, Telmo, he used to work for you guys, and he tells me you guys have huge volume in Mexico. So what do clients want?
And so Edgewater's had a large presence in Mexico and Latin America for a good 10 to 14 years. And I want to make sure that we talk about this for a little bit, because it's something that's going to be very exciting in Latin America in the next year, year and a half. But much the way Mexico floated their currency in 1994, Chile's looking to float their currency in 2024, 2025. Now, they had plans to float it by 2023, 2024, a couple years ago, and it gets pushed out. But this is something that's going to happen. And when the Chilean peso does float, the volumes that are traded in a pair once it floats absolutely explode. So all the brokers that are here, anybody that has a real interest in Latin America, your focus really should be, you should have a definite business model and focus on Chile, because when they do float, there's going to be an explosion in volume. And when volumes explode, you get an uptick in volatility as well, which is both opportunity for your clients, opportunity for you, and opportunity for the market in general. So,
will they set a date for or they will just do it?
They've been setting like second half of 2024, okay. And now it's been pushed out to the first half of 2025. I don't know when it's going to happen, but it's definitely going to happen.
Okay, and Chile is quite big.
Chile's quite big. I mean, it's bigger than Peru. It's bigger than Colombia. It's not as big as Brazil, of course, but it's the second largest NDF traded pair in Latin America.
Okay, yeah, that takes me to this sort of my next question. I'll stay with you, Matt. So, which are the biggest traded currencies here, or and also the most promising economies? You touched on Chile, of course, is going to be the next big one. Brazil is massive, right? So
Brazil is huge. Mexico is enormous. I mean, you just have to look at their natural resources of each country to find the size of their economy and the amount of volume that's gone through the market in their currency pair, whether it be natural or speculative. Obviously, Dollar Mex has got an enormous footprint in the market.
Is it the biggest here by volume?
It is the biggest by volume.
Bigger than Brazil?
Yes. Yes.
Okay. Why is that? Brazil is bigger economy, but Mexico trades
well,
more
because
volume.
Mexico's rate floats. And when a rate floats and it trades spot, it has an enormous...
Yeah, and it's part of the main majors. So it's settled through CLS, right?
Yeah. It does settle CLS, and it does have cash and Tomnex and all the variances of a currency pair that you want if it's going to be a floating pair.
Okay, Anya, what do you see here in terms of the region and the biggest economies and biggest?
I would say mix and match Brazil. I mean, after all, there's 200 million people there, right?
Yeah,
so
220, I think.
220, yeah. So then there's Mexico, 120 million, then I would say Colombia next, and then Chile and Argentina. Maybe for that reason, a lot of European brokers going into Uruguay and setting up offices there. As per currency pairs, I get a lot of requests for peso, Mexican peso. I would agree with Matt here. Then I have requests for Brazilian real as NDF, a lot of this, Peruvian sol, and Chilean peso. So this I would say the top one.
John?
On our side of the business, we see a lot of business coming in on dollar mex, obviously. I think it's the most volume we process in this region. Recently, we've had a lot of interest on Colombian peso. That's a new development for us, as well as Chilean peso as well. So for us, we're still at the early stages of LATAM, where we're getting to know the region, and it's a learning curve. I think from the largest economies that we have in this part of the world, Brazil, Mexico, Colombia, and Argentina is where we see a lot of potential primarily.
Yeah, Argentina might be the next big one as well. They're quite big, 45 million people, I believe, and a new government who is very friendly, business friendly, right? So, Arilo.
Yeah, I echo what everyone has said so far. I think that definitely, obviously, Mexican peso and Chilean peso are at the top from our side. I think what John was mentioning earlier is also important to consider because each market has its own volatility challenges, you would say. For example, in the case of Chilean pesos, you need to think about how they are linked to commodities and in particular to copper. So these are the things that you need to consider when you're thinking about currencies. You cannot just think about the size of the market. You need to think about, okay, how does it work locally? And in the same case, Brazil is a huge market, but it has a lot of restrictions. So there are things that you need to think about. But we do see the demand for, obviously, Mexican peso, which we offer, obviously, as deposit trading collateral as well. But I think Chilean peso would be the second one for us.
Do you think it's hard to find liquidity for all this, like exotic pairs? Like Peruvian sol, how would you manage risk on that, right?
On which one, sorry?
Like Peruvian sol or Brazilian real as an NDF?
I absolutely agree with you. I mean, this is why they haven't grown as much. Yeah. And I think those are, if you look at the markets there and the operators that we have met in Peru or in other smaller markets, what they're doing is try to find another way by going to Europe or, for example, even to Dubai. So they are trying to find creative ways to operate, basically.
Yeah. Paul, you used to be a bank trader, right? So you used to quote all this stuff.
Well, I was going to say, if you want
20 years
liquidity,
ago.
come and see me after. Yeah, I mean, I was never a bank trader. I was always a broker trader, basically, voice trader, yeah. So, I mean, to me, and sort of what Matt alluded to, dollar MEX is pretty mainstream. It's always been one of the pairs that we've put out there. You put your G10 out there. We sort of, I suppose, pigeonhole dollar MEX with dollar rand and some other pairs that get quoted. We ourselves rolled out some NDFs, and we sort of formulated an NDF, I'd say, for the man on the street, a retail NDF. It's dollar Brazil, Chilean peso, and Colombian peso. I make no sort of claims here. We're not in the league of the Edgewaters and John at Beta Broker, but it's growing. We're seeing an incremental amount of volume coming in and interest coming in. I was checking the volume figures from last year. I think out of the amount of volume we've done, 95% was dollar Brazil. The Colombian and the Chilean were pretty sidelined. I looked 2024, and already we've done more Chilean peso than we did at the whole of last year. So it is coming into play, and maybe to what Matt alluded to with floating it has helped that out. But for us, Mexicans always been important products. I used to trade it years ago, spot and futures. It is volatile. The leverage rates are a fair amount higher than the G10, so we have to factor that one in. But it's something we get asked about. Funny enough, talking to the local brokers here, for my experience, there hasn't been a lot of conversation about local currencies. They want to find out what our indices are like, a little bit of gold, but not as much as we alluded to. And also our G10. I suppose, once hopefully we get some of these brokers through the door and we can give out a decent NDF price or a local price, we can sort of, I suppose, expand on our LATAM currencies as well.
Yeah, that brings me to the question of what clients in each of our regions want from here, or maybe from here to our regions. By the way, I forgot to mention, so I'm based in Dubai, you're USA, Dubai,
London.
London.
We all talk about LATAM.
Yeah, but what do the clients, so clients in US want a bit of LATAM, or you see LATAM clients want access to the global markets? What do you see?
Exactly. That's a huge talking point. The electronification of the Latin American marketplace has been going on for a couple of years now, and it's still in the infancy of that maturation. And your uptick in Chilean peso, or your uptick in Colombian peso, or Peruvian, or the pen, is all because of the electronification of the main banks in those countries. And they now have technology. Some of it could be Edgewater, some of it could be B2B, some of it could be another vendor, but they've electronified their markets. And when you electronify your markets, the access to those rates become accessible to the whole world. And you have a German asset manager now trading with a bank in Peru. You have a Japanese fund manager trading with a Chilean bank. And whether there's a credit intermediary in that relationship, like an Edgewater would be, or if they're going through the retail broker space, it's irrelevant, because the product is being electronified. And when it gets electronified, it finds its way around the world.
And the other way, you see a lot of clients come to you here now then saying, now we're
Yeah,
now we have capabilities, we would like to do
absolutely.
stuff in China and Hong Kong.
We have U.S. hedge funds, we have German asset managers, Swiss real money names, all trading with the core banks within these Latin American countries, not to mention Mexico as well, although it trades spot and it's already electronified, connecting everybody through technology and electronifying not just the consumer of the liquidity, but the liquidity provider themselves, has completely changed the dynamic of where you go to get liquidity in Latin America and in Mexico.
Great, Anya?
Well, I wanted to touch upon the topic of liquidity providers in LATAM, because LATAM in general is an evergreen market for liquidity providers and for retail brokers. And everyone likes flow that's coming from LATAM, because it's an easy flow from the risk management perspective for many liquidity providers and retail brokers. Deposits are rather high. Brazil now is what, 4,000, right? And then Mexico at 2 or 3,000, right? Deposit size. So it's a perfect deposit amount of deposit from retail traders. Then we have a whole layer of less sophisticated traders. So the volumes are really attractive to European brokers, to any liquidity providers that are in the region. They want to be here. They want to be connected with the local brokers, with the local traders, just to be able to, to run the risk management on that flow. So they are going into the region. Yes.
Excellent, John.
So for us, we have a lot of European clients from different parts of the world, constantly inquiring or asking for a little bit of advice on our end, how to approach this region. We ourselves are trying to identify that, okay? That's the truth. But nevertheless, what I always tell everyone is, this is a very interesting part of the world, as long as you understand what people want and you can facilitate that service. I think it's about not just meeting that expectation, but exceeding it. That will keep you going here. What we see, though, is one very interesting development, again, back to the NDFs, is that if you come to this part of the world and you're slightly localized, that is your way to engage. And that's, I think, where we've been pretty successful lately because we've been listening to what people really want from us. I guess it's for every market. It's not just here, but that's a unique dynamic in this part of the world.
Yep, Marilu.
Yeah, for us, I think I did mention that we also offer trading technology. And what we are seeing in particular for LATAM is that they're really interested in leveraging more our trading technology and the fact that we have obviously licenses in the UK, Europe, and Dubai. And they're trying at the same way that you are trying to come into LATAM, they're also exploring opportunities to go there. And they're trying to also to grow through LATAM with more white labels, or how they call it, marca blancas here. So certainly we are seeing a combination of like broker services with trading technology that is not currently available in the market. And now we are coming obviously here, and we're there. What you were mentioning, Anya, so this is where they will be able to connect with the liquidity providers, right?
Paul, clients accessing the region.
Well, I think you only have to look at the EXPO floor with the brokers that are here. The brokers that have come out of Europe, they come out of the Middle East. There's probably a bit of Far East input here as well. They're only here because they're interested in LATAM and they want local business. They want local retail business. For us, I mean, we only brought in the NDFs because actually one broker said to us that they wanted to make a splash in LATAM. So we effectively created this NDF product for them. Unfortunately, it didn't quite work out for the broker, but we're left with this product, so it's worked out quite nicely for us. So we are, I think, as a prime of prime, we are getting asked increasingly to accommodate our retail broker clients because they want to go into specific areas of the world, not necessarily just LATAM. There's a lot of talk about African currencies and some more of the sort of on the sphere Asian currencies as well. So the LATAM side is definitely where interests of our clients, and you know, there's probably a few of our clients here today. It started with the products we mentioned, but there's a long list of products in LATAM currencies that we're getting asked for. As Matt said, the electrification of it all, quite right. You know, we don't have a dealing desk. You know, I can't sit there and quote a 3-month NDF. We're purely fixed API. So as long as we can get that pricing from our providers, and traditionally our providers are based in Europe and the US, you know, I think as we potentially go further into LATAM and, you know, maybe break away from the retail broker market and maybe start pricing funds and small banks, no doubt we'll get a tap on the shoulder and say, why don't you take dollar MEX from us, and why don't you take Chilean peso from us? And it'll be a bit more of a two-way street.
Yeah. I think from our side, ATFX, we've been here for a while. On the Connect side, on the institutional side, we've been here for a while. And then our office here is expanding. The eyes of ATFX Connect sort of management is on here. We've got a new head of LATAM who's come here, opening up new offices. So there's a lot happening here for sure. So I might have time for questions from the audience, maybe one. But before that, liquidity events, is that maybe some thoughts on that? What do you think in terms of, you know, what we might see?
I get asked this often, and I alluded earlier that I believe the next liquidity event will be gold. These events usually take place in the end of New York period in the early Asian hours. It could be on the startup on Sunday or Monday. It could be at 5 o'clock to 8 o'clock p.m. Eastern time. But the position sizes in gold, which all of the brokers know what position sizes they have, and the sheer number of brokers that are out there, all you have to do is walk out in that hallway and see what numbers we're talking about, which is a fraction of the numbers that are out there globally, and take your positions that you have of your clients and multiply it times 10,000. And that's going to give you a rough estimate of a fraction of the gold exposure. And when people become overexposed in anything, eventually it uncoils. And that uncoiling in gold happens every 3 to 4 years. It's been that way for the last 25 years. And we are in the cycle now of that window.
I love these predictions. So it's down, not up.
It's the opposite way of way the market is positioned. And right now the market is positioned very long. And if you listen to Jamie Dimon speak in the last couple days, where he forecasted that he thought that the U.S. interest rates might hit 8%, is a complete calculus change for why the market has been buying gold.
We have three predictions from you from today, Matt.
Yeah,
What is the first?
First one was about gold, right?
That's-
About
And the
sort of
second-
risk management. And second was about NDFs and Chile,
Yep.
right? And the third one you just mentioned now.
That more alluded to the first one on
Okay,
gold.
so the next event
Yeah.
we should
Yes.
connect.
You have a
and
prediction,
discuss- and
Anya?
more prediction. Well, my predictions are not related to liquidity, but to technology. MetaQuotes are opening office in Mexico, right? They announced it probably like 2 weeks ago. So that will be a big step because now local brokers will be able to have their own MT5. That means they will be able to connect on fixed API to European brokers, to institutional liquidity providers. So I will be very interested in learning how that will work.
Just to add on what Matt, you were saying prediction-wise, I'm not a financial advisor, therefore I'm not directional.
You can give a prediction, though.
What I do predict is that the market is going to price gold slightly different from a margin perspective. I suspect we're going to see higher margin requirements in the near future. The longer this
That could be the cause of
continues-
the
Well, that's a safety precaution for the
yeah,
imminent.
what the event's gonna
Yes.
come. Okay.
and it's all future prediction, right? Is that possible volatility increase ahead? So I think margins is a key to be monitoring.
What do you think?
Yeah, that's interesting. Yeah, I would agree with you, definitely. I don't think I can predict anything, and I'm definitely not a financial
You
advisor.
can go for Bitcoin if you want.
No, that's fine. Well, that will be an interesting one, right? The halving is approaching. But I think from my perspective, I do have very clearly is that maybe I would like to predict after the elections. I think the US and the Mexican presidential elections will definitely define, obviously, the fiscal and monetary policies. And based on those, then we will be more clear about what exactly will happen.
When is the Mexican election?
So the Mexican elections are in May, right? So
May.
and we have diputados and senadores as well, and that will make a big change because maybe even, for example, let's say the president is one. I'm not having any political comments here, but is one, and then the senadores and diputados then don't allow to apply any fiscal or monetary policies that the person would like to do. So I think you need to wait for those critical risk events to then make some comments, I would say. So I think that's why I'm very cautious, because the US and Mexican elections certainly are going to have a big impact.
Matt, did you want to add something?
Well, if forecasting were around dates and events, then it really wouldn't be that shocking when things happen. So I don't know if the U.S. election is going to have an impact on gold liquidity and a liquidity event.
Yeah, but I would say, I mean, as you know, US and the LATAM region are very linked. So whatever happens in the US definitely has an impact on LATAM.
Of course.
So I think we cannot forget about that.
I think John's point is quite valid, actually. I mean, the exact range I don't know, but 1850 to 2370, and margin rates are still the same, which is quite amazing. So at some point, the LPs are going to tap us on the shoulder and go, it's got to go up another couple of %. I think that will probably happen. I agree with Matt. There will be a bloodbath at some point. When it's coming, you know, that's the fun of what we do. We never know. But we've just
Matt's
got to...
saying this year. So
I can't disagree. I can't disagree. I don't necessarily think it's going to be an amazing event that causes it. I think it just might be the natural attrition of the market. We'll get to a certain point, and then all of a sudden, this gold liquidity mirage will be exposed with loads and loads of entities running loads of risk on their books, and they have to exit the positions. And there's not the prices there to sustain the what I would say a legitimate market move, and it could be pretty nasty. So make sure all your clients are well margined. There's plenty of cash in their accounts. And then hopefully we'll all be okay. But it's coming, and it could be months away.
I think we're done. All right. Thank you so much. Thanks, everyone.
Thanks a lot.
Thank you.